A very warm evening to everyone, and very kind of all of you to join us in this webinar, where we plan to discuss different aspects of or different challenges that we confront in our day-to-day activities, in not only in terms of collections but in terms of financial services space. Before we get started with the webinar, I just wanted to set the context. As what and thanks Venkat for introducing all the panel members, and again a warm welcome to all the panel members again. So I would want to start by just giving a background of what our discussion would actually be, and for that I would request the audience to think about two words. One is trust and one is accountability. So what basically does trust and accountability mean to any one of us here? Well, I'll just give you a couple of seconds, and you can just think about it and have some idea, or try to visualize something about these two words called trust and accountability. Now, I did look up a lot, and I did try to research, but in my from my personal point of view, these are the main core pillars of any financial business. I mean, there is absolutely no way that you can operate in this competitive, in this risky world if you don't have these two core values as a part of your business. And us as collection professionals, we of course play a very proud and a very significant role in upholding this trust. So starting with that, in terms of the financial services business, I think our business has evolved and come a very long way. Now, just join me in trying to understand a timeline, and I would just take you back to 20 years from now. In 2003, that was my first assignment, and I was working with Citibank, and we used to spend close to 4 days in the beginning of the month just trying to run a macro in an old software, and run stat cards or status cards that we would have to allocate to our agency personnel, and that activity would take 4 days of our valuable time. And what we used to do is that we would, once the printouts are ready, we would go and personally hand it over to the agency field staff, and we would also, end of the month, see to it that all these stat cards that have been given to entrusted to them is taken back and properly shredded. So that, I'm sure, is not a part of anyone's system now, because fast forwarding the timeline to today, I think everything is just a click away. And talk about a loan origination, talk about onboarding a customer, talk about processing an application, talking about credit underwriting. I am part of a product which actually has a complex underwriting requirement. We try to do it within minutes, if not hours. Talk about risk management, customer care, of course, collections. The buzzword has always been collections in terms of all fintechs, and most of the fintechs products have been centered around collections and analytics. Legal. The previous webinar that we had was on ODR, and in the year we were very early adopters to ODR, and that's one part of it. And of course, compliance. And most of what we are going to discuss today would be centered around compliance. And one aspect of today's technology is that there's a lot of data, and there's a lot of data that's changing hands. And so, with a lot of data changing, and data in today's time is power. And I'm sure most of you would have are followers of these Avengers series of movies, and there is one of the oldest movie where there's a dialogue that goes, which comes from a character called Uncle Parker, which says, with greater power comes greater responsibility. Well, in today's discussion of DPDP, I think this particular dialogue has a two definition, where we are not only talking about with great power comes great responsibility, but great power comes great responsibility and great accountability. So just to give you a context of what we're talking about something new that's come up, and which is not sector agnostic. This is something that is prevalent across all sectors, and as banking professionals, we have always been the talking points torchbearer of any initiative or any policy change. And I think we would surely get into adapting this particular process. So, what exactly is this DPDP? And what, how does it affect us specifically as a bank or financial institution, or us as collection professionals in our day-to-day activities? To address that and to give us our deeper insight, we have joined by all the three panelists. And I would request all of you to, this is going to be a very interesting session. And I would request all of you to just turn on your learning hat, because that's exactly what we have come here to do. And I would then probably, with further ado, invite our first guest speaker, Mr. Ravinder Reddy. Ravi, over to you.
Yeah, thanks, Sriram, and thank you very much, Venkatesh. I think a great initiatives, I would say, no, becoming a cohort and helping each other with the knowledge and also practices on the professionally. Um, Definitely, this is going to be a good insights for the field. Was the colleagues who have been joined on this? Maybe Sriram, if you want to present the slide, I am unable to see the slide here.
It's already on presentation mode, Ravi.
Not sure we are. Is it with anyone?
Or is anyone else not able to see the slide?
Yes, I can't see it.
We can't see the slide.
Yeah, we can
Yes,
only
very
see the
early.
link.
We're able to see the only link, Sriram.
Okay, present, stop sharing, and let me start presenting again. Okay. So, okay, पहला slide किसने देखा ही नहीं.
Yeah, so
What about now?
still it's showing the
Can't see it.
invitation page, what we call as
He's just saying it
the
doesn't.
invitation
I
page.
think you're sharing a wrong screen, Shiram.
Let me just check that again. My bad. So, stop sharing and let's see. Okay, yeah.
You have to share the window.
Okay, I'm going to window. Let's see. How about this?
Now you
When you can present, yes,
now you can present this.
you can open your presentation now. You're able to see our members.
All right. Great. Yes, Ravi.
Shiram, you have shared your entire screen or the entire window. You have not shared the PowerPoint. You have to share the PowerPoint window, not the browser window.
Okay. So, send in window. Share. I think this should.
Yes.
Yes, you are done.
Now
Now
it's-
you just change it to
Thanks
presentation
again.
mode.
Yeah.
And my apologies. So this was the first slide, and moving on. Yeah. Audio. Ravi.
Yeah. So, a very good evening, all. My name is Ravinder. Venkatesh has given me a brief introduction about the gracious introduction. Thank you very much. I think I would start with a simple analogy of where we are currently, and before this, the Digital Personal Data Protection Act, the legislation which was enacted in 2023, but it took the wheels to frame for about 2 years. So the wheels were framed by the government after a lot of deliberations that how the wheels would be and where to stop, where to take speed, the acceleration. And the rules were framed and released in November. So you all know about it. But if you look at this aspect, I would say pre-legislation, where are we now? Is that anyone who goes to a mall, a shopping mall, or any of these business centers, just for a voucher or a gift voucher, what we do is we liquidate, or I would say we dilute our personal information to all, right? So that's how the environment currently we are in India. Of course, on the global, there are all geographies gone into the data, into the privacy regime. But in India, it took so long. After it enacting, it took 2 years again to frame the wheels. That's the rules. And now, fortunately, the rules were framed after a lot of deliberation with the industry inputs. Now they came with this particular rules framed in November, announced it by the government. And what it says is very clear, simple analogies about your data. Now we all know that the gold has taken its peak in last 2 years, and now similar more than the gold is now our data. So data is a new gold for us. Now everything what we protect is equal to a gold now, right? So that's where we are coming to talk about, give you perspective how we are going to the new regime, which we all should know, because it also has an impact about violations, compliances, what impact on the organization which we are working, right? So that's where we are going to talk about quickly. Sriram, if you can go to the next slide, I think we will be talking about where it applies. This particular Digital Personal Data Protection Act, quickly, I would take you to make your understanding is where it applies. It applies to all the digital data which is being processed in India, which is collected digitally, or it is digitized later when you are collected physically. So both applies, but when you are collected physically and later you made it digitized, still the law applies. One thing which is not going to apply is if this personal or domestic use between two individuals, right? So if you are using between me and Sriram, we are sharing some data personally, this law would not apply to that, right? The third one is again, wherever the data is available publicly, that would again gets excluded from the legal obligation. So this is about the how where it applies, and as long as it is in digital mode, this law applies, right? So this is about, and when you look at the data which even for the moving this data outside the territory of India, and it is being used for goods and services of the Indian citizen, and it moved out of the country, still this law applies. Wherever in the world it moves out, that particular obligation is on that entity which is processing the data, individual data. So this is the four snippets what is very critical for all of us to know on the applicability, right? So moving on to the next slide, we would talk about quick key tenets about the critical areas what we are talking about, right? So if you look at this particular the Digital Personal Data Protection Act, what it talks about the three critical areas. Now, if you look at this table, very clearly says, I would not go much in detail because I think we have our esteemed panel who can decode more about it, but I would just give a click. What it says is the three major components what we need to look at is the data principal is the person who gives his consent and provides his personal data, right? In simple language, I would go in that way. And the data fiduciary relates to the entity or the agency which is storing that particular data with a notice, with a verified information clearly giving and storing the data as per the concern of the customer. So the concern of the customer who is given a particular purpose, it is on the fiduciary who has to store it, who has to forego it the moment the purpose is over. So these are the two critical areas if you want to simply to know about what is data privacy in the Digital Personal Data Protection regime. It says that two are the key areas where the life cycle moves is one, the person who provides the information about his PI information, what you call as personally identified information, and when it comes to the entity which is storing has the responsibility. That's called, it's a fiduciary responsibility. So their responsibility is to store and protect it, and also process it to, even if it is processed third party, it's own the responsibility in a processing in a legible way, and again forgetting or maybe the removing the data the moment the purpose is over. Now the last part is the regulatory part, which is the board which was set up by the government of India. Now it is being announced on November that the Data Protection Board of India has been formed, and they have the regulatory angle which monitors the grievances and how this data is being properly being followed and the used and again, no process as per the law. So any deviations, any happens, any breach happens, this is the board which takes into the action on this particular resolutions. So this is a quick summary, and I think my esteemed panel would give a brief detail in his session. Moving on, over to you, Sriram.
Thanks, Ravi. I think it's a good start. The three key tenets in terms of a principle, which to my understanding happens to be a customer or anyone who deals with an entity. Then the fiduciary, of course, is the entity. As I told, we clearly understand this is sector agnostic, so entity could be anyone, right from a telecom company to a maybe even a government agency, a power corporation to anything. And of course, this all comes under the purview of the regulator, which is the Data Protection Board of India. So I think this is with this, we have a brief understanding of what the DPDP Act is all about. But Ravi, now I think with this background, given this background, I would request you to stay and answer a few questions. Now we have come up with certain quick points, and we would all, I in fact want to now, I will turn the attention to all the three panelists. So there will be three segments in which we will be probably covering this, and each segment would contain 2 or 3 questions. So probably the first segment that we would want to understand is in terms of what the exact ground reality is. So Ravi, the first question that basically comes across anyone who's trying to understand the DPDP is, and more specific to collections, what would first get affected? Are our call centers under threat, or do the field FOS, we are going to revamp the way the field FOS approach the customer? The digital nudges, we are sharing too much of data with too many fintechs, and of course there are many other agencies. So which part do you think would first get affected, or where all of us need to show our immediate focus and attention?
Good question. I think that's typically when we talk about the Digital Personal Data Protection Act, the first pinpoints in collection point of view, which is actually depends on the which touch points involve the most personal data processing, right? So personal data process, which of the area is touching the first point, right? And the concern matter. Now, coming back to look at the way how the collection starts, the first early touch point is what? The digital nudges right now, right? The digital, what we are doing is the first to feel the heat is digital nudges. Why? Right? Because it's an SMS which goes on the first as a reminder, as a gentle reminder, and a WhatsApp reminder which it gives it to the customer, and then comes the email, app notifications. This involves a direct communication, right? When using these personal identifiers like your phone numbers and email IDs, this is the first one. Now, DPDP impact, what it shares is you need to have the valid consent for these communications. An opt-out mechanism must be clear and honored immediately, and a data minimization and purpose limitation will be strictly applicable to this. Now, this is the first touch point, and the second comes is your call center, right? The call center, what we handle is always connect with the customer, and the team has handle the sensitive personal data. And in terms of when you connect with the customer, you have a verification, right? When we talk to the customer about the verification, and we also start some negotiations, and all those should be in the recordings. If you have, as per DPDP Act, it should be having a collection recordings about the personal data, and it has to be having a retention limits and the security storage. And again, the person who is contacting again needs to be trained on the consent language and the data subject, right? That's very, very important on when we say call center. So the third is again the field, our feet on the ground, and our team who does the job. And their physically visits involve the identity verifications. Sometimes they collect the documents, right? So they're collecting physical copies or photo IDs of customer, explicitly asking consent to secure this. And sometimes this is where the breach happens, right? So you go for a physical, you collect it, and you convert it into a digital form. So this is the gray area, which is again. So this is the part, and the last one, as you rightly mentioned, is agency is also one, right? They have the process, on collecting the data. If I remember, maybe I'm also with was working with ICSA. Not all of the agencies has these Excels and their own teams giving the sheets, sharing the numbers and to the field teams and feet on the ground, and they always their own MIs giving data pilot conversion, how much is coming and all those terms. So if in summary, if you say the digital ledgers will be the first pain point, then comes the call center, then field collections, and finally the agencies, because they carry the systemic risk, right? All these are are not compliant as per DPDP if you want to continue that. So that would be the first four areas would be the on the flow.
Okay, just one query on this. Now, we are talking about a consent to be taken from a customer in terms of viewing his data and even probably communicating with him in a future time and future point in time. Now that I'm sure everyone is planning to build their systems with regards to our current and future customer onboarding. What happens to all our legacy contracts?
So now it's now the time. If you see the enforcement timelines is not immediate, right? So now if you see the November was the date which the first set of enforcement started is by setting up the board, which is the regulatory body, and the second set starts with the consent management system, which is a mechanism which need to be see how a person concerned is recorded, how consent is removed. Now, earlier the understanding was consent was on the books of the the organizations, the entities, somebody who is managing, working for the customer, and working as the first point of contact for managing consent. But now they shifted completely to a third party is a consent management, which can be a tech platform, a stack, which can help how they can use this complete end-to-end encrypted mechanism of consent. Now, if you ask, if your question is this particular is prospective for future, maybe in May 2027 actually starts. But if you look at this particular timeline is given to make sure that even you also start your system, convert the legacy system data into our point. Now, from financial angle, I understand it is the huge data which comes, but there is one thing is clear that this comes with a condition, right? So customer contract has to be performed during his life cycle. It cannot be that the other entities, how they use it, that he can revoke the consent immediately. But our concern, especially from financial sector, if a consent is revoked, then automatically there lies a condition to the customer that he needs to fulfill. So in nutshell, I would say my understanding that even the slowly it has to convert the legacy also to get it one-time concern into the system. But that's where we need to really look at how the new regulation evolves, because a lot of ambiguity on some of the areas which the government has to clarify now.
Thanks, Ravi. I think very strong insights on consent. We spoke about consent at least 6 or 7 times. And you have a good point where in case a customer withdraws his consent, we might have be well within our rights to to revoke the loan, so to recall the loan. Okay, so I'm sure many participants would have had similar doubts regarding consent, and I would urge all of you to just make a note of it in the Q&A section. Probably we can including other panelists, we will probably get more detail on that. So moving on, the second question that we would want to ask Ravi and try to understand is, in terms of the data sprawl across vendors and tools, we as collection leaders, are we underestimating the data sprawl across vendors and tools?
In a way, I would say yes now, because what happens is the collection currently under the environment, what we are really often underestimate the sprawl what we, and here is why what I understand is for the 4 reasons, right? One, the collection has the multiple vendors, and if you look at the dialers, the CRM, the CRM system, what we have, they have payment gateways, we have agencies who does the skip tracing tools, we have tools, and we also have SMS and email platforms who works for with the TRI guidelines. All these storage are fragmented, right? The personal data is fragmented differently. No, it is not in one unique place. That's one, because probably that one area which we all need to link. That's the how to no. It is very hard to propagate and replicate all across the touch points, and because bringing that consent enforcement is one thing which we need to look upon. Now, shadow integrations, again, we might have some of the APIs, we might have some Excel exports, what we create reports that which cannot, the copies cannot be controlled where it goes and where it stays because of the various agencies and stakeholders what we have. So that's one. Again, you also have your legacy systems of practices what we do, right? The team does with different agencies, how they create reports and how they create backup again, also do some analysis with the entire, I would say, the life cycle governance, like how the data flows, and they might have some backup created in multiple folds, right? So duplication they might be having backup again for that, they might be having another set of backups. So this is again will also have a challenge to see how we are looking. So these are some of the areas we might be underestimating it. And again, the last one piece is again agencies. So when we outsource, right? So we have the partners, they maintain their own system, right? Each of them, some are very tech savvy, some are the traditional conventional way. They use it with Excel and normal the old style. So this is also another layer of. So that's the four areas. How do we need to see is consent. The impact is the enforcement of consent, and also the purpose of limitation. How data is to be used on a specific purpose. It cannot be used, if it is used for analytics or something, that should be without visibility or without again re-engineering to see that person is identified. So right. So another one is about the weak area. What we have is the vendor who has a very potential weak link in entire the collection ecosystem, I would say, because these are the people who actually gives us the ground support clearly, but their own systems are not so closely integrated with us. So I would say these are the areas which really creating a spot for us is for collection team.
Great. Great. Thanks a lot, Ravi. I think you have highlighted some of the ground realities or probably something that all of us need to plan for with DPDP. But it's not just about integrating with vendors and channel partners and giving them access to data. But without data, of course, the reality is that they will not be able to go about doing their business. But it is also about seeing how we as a data fiduciary take responsibility and accountability and have our controls in place. Good to see that we still have time. May of next year seems to be a reasonable time to get our act in place and get our technology and infrastructure in place. But thanks a lot, Ravi. I think it was very insightful. And I would now probably want to invite our next panel speaker and to Apurv Agarwal to give us, and we would directly dive into a Q&A and very specific 3 questions we have. And we can start with that. So Apurv, the first being that what are the top 3 DPDP violations you expect in collections in a year's time? Once.
Hi, Sriram.
Hi, Apurv.
Hi. Thank you for calling me up. Now, in the first of the TPT rules which has come out, which has actually enforced the TPT Act of 2023, the 3 things which we see which are the anticipated violations in the collection center primarily. 1, failure to implement reasonable security safeguards. You just mentioned we have time till May 26 or subsequent to thing. Even though the timelines are staggered for enforcement, time is actually short to really implement it. So failure to implement reasonable security safeguards would be a primary risk which people are going to carry in the first year. The risk primarily is because many collection agencies rely on legacy infrastructure or third-party fintech vendors that lack granular security controls to protect the data and prevent leakage. I'll give you an example. I mean, we all fill out KYC forms for various banks and various other stuff, right? What happens to the forms when the data is entered into the bank KYC norms and the bank software? I think most of the time it's sold off to Rabdiwalas where all the data is procured out from. So that is a thing which is a legacy infrastructure thing which we need to overcome and see how to protect that part. Common violation with this would be the unencrypted data storage or lack of access logs or inadequate cloud configuration. So I don't think so many people would be able to, cover that risk up. The downside of not covering the risk and the violation would be a penalty which is very severe, with fines reaching up to rupees 250 crores.
Wow, that's quite something.
Which is a very huge amount to pay out. And I don't know how effective the board would be to implement and enforce the same, but that's the law as the current date. The second risk which may happen or violation which may happen the first year is that the organization could provide a clear, specific notice at every touch point before collecting or using personal data. Now, what happens, most of the debt collectors often use broad, generic language in the terms of service to cover varied data uses, which is no longer compliant. Add to that, I would say, if it's on a website and data sharing, the kind of information and I would say law is also partly to blame for that because we draft those consent letters and consent forms are very lengthy. How many of us actually have the time or the ability to read it and provide a consent to that? Most of the consent are shrink wrap thing, go down, cursory glance, press the button, I agree, terms and conditions, and give it out. So that's another risk which most people are going to carry. The violation for this would be the failing to provide notice in all relevant local languages or using vague purposes like improving user experience instead of specifying debt recovery. Now, in this, what I'm talking about relevant local languages, most of the websites which we have seen or I have access to provide most of the stuff in the language English or Hindi or probably one or two other language. What happens when a person is not speaking that local language? That language is important. How does that person understand that consent? That's a gray area for me. Now, the penalty for this is also very huge. Violation related to lack of notice of invalid consent can attract fines of up to rupees 200 crores. So that's a second violation and the penalty thing. The third would be, for me, ignoring data principal rights, that access and erasure. Now, individuals now have legally, under this DP Act, legally enforceable rights to access the data, correct inaccuracy or request is deletion. Now, the agencies have up to 90 days to correct the data once it's provided by the end user. If it's not done within 90 days, it is a penalty. Failure to fulfill these rights can result in penalty up to 50 crores. Now, from my experience, and I'm using banks as a common example because that's where most people submit the KYC norms and things. KYC forms get lost, data doesn't get uploaded on time, things go to back end, and it's with some of the fintech companies also. This is going to be a long drawn process on implementation, enforcement, and the risk carry. So, from my perspective, these are three major risks At least
I
the
think
first, and then
really
many more
strong
may come up.
insights, Apurv. I think really strong insights, Apurv. Just to summarize, one is failure to implementation. If there's a lag before the deadline. Second, in terms of how we encrypt our data. Third, you also spoke about different touch points and modes of communication, vernacular language being one. And of course, what is the most the biggest aspect of it, this aspect for us is the penalty clause, which is up to around 250 crores. I mean, for a
Correct.
small fintech or NBFC, that would ruin your ROE for a particular year. So great. I think started on a good note. But carrying on with that, how strong or is legitimate use as a defense for collections activity?
Okay.
And the concept
Now
of
coming to the strength, I would divide that into two aspects. One, how strong is the defense of legitimate and how weak is the defense for legitimate use. Now, the strength or the valid use cases for legitimate use are compliance with law or the court orders. If somebody or if the law requires you to disclose something, you have to. If there's a court order to that, you have to. So processing data is mandated by existing law, that is RBI guidelines for banks, tax authority requirements, or court orders is a clear and strong legitimate use. So to prevent money laundering, let me give you an example. You need to have the KYC norms in place, and you know, a large cash deposit, you have to obviously give accountable to that. So those are legitimate use. Performance of a contract, while not explicitly used listed as standalone basis like in the GDPR, processing data that is genuinely necessary for the performance of contract. Example, using the customer's address for processing an order or retaining loan agreements for compliance falls under retail legitimate use of the voluntary provision or data for a specified purpose clause. For example, to show your IT and all, Aadhaar is the standard norm. So if you're disclosing your Aadhaar, indirectly disclosing your mobile number and your other personal data. So that would be a legitimate issues. Fraud detection and prevention. Using personal data to detect and prevent fraudulent transactions or protect data fiduciary from liability can be justified under safety and security legitimate use ground. And reasonable expectations. Now, processing that a reasonable person would expect in the context of relationship with data fiduciary, example, bank processing transaction data for account management may be considered as a legitimate use. For example, if I have to do an RTGS with a bank, I would need to give the counterparty's bank account details and other data, otherwise the process cannot be completed. So that is a legitimate use transaction. Now, going a step further, what are the difference which would not be a legitimate use according to me? Secondary or unrelated use. Using data collected for debt collection for secondary unrelated purposes such as marketing or profiling for third-party advertising would exceed the scope of legitimate use and require separate explicit consent. Like if I give my data to a bank for, let's say, opening a savings account, I cannot use that, the bank cannot use that data to market their sister concerned mutual funds or other financial products. That would be an illegitimate use or secondary use. Intrusive or disproportionate processing. Activities deemed overly intrusive or not proportional to the purpose. Example, excessive surveillance, harassment, or contacting unrelated third parties without a legal purpose are likely to be covered and carry high regulatory risks. For example, we get all these marketing calls that would be covered under this, under data privacy. Even though you have the data, you cannot use it for that. Lastly, lack of transparency. Even when relying on legitimate use, the data fiduciary is still expected to maintain transparency and provide a clear privacy notice explaining the process activities and how the process is going to work and how the data is going to work. If they don't provide that process, then it's an illegitimate use. Yeah, so for me, that's
So
a take on the
basically,
legitimate use.
so basically, there are two ways to look at it. So legitimate, anything to do with the law of the land, that seems to be well within a legitimate use. And illegitimate, very interesting. So you are basically indicating that cross selling might not happen anymore. A customer taken a car loan, being approached for a home loan in future might be an area of greater deliberation probably in future. And of course surveillance and harassment. So this I think is more tuned to business development than in collections. But I understand
Yep.
this part, which is lack of transparency. So anything you can elaborate on lack of transparency specific to collections?
See, lack of transfer specific collection would be cross marketing, cross selling, and also to use the data. I mean, okay, let me give an example. More in the collection deck. I mean, in the past, even recently, I don't know how many people, fintech and banks use it, especially credit card guys. They send thugs and other people to collect your debt. So that is a method lack of transfer. You're sharing data with unwanted people to collect your debt. Correct? I'm not saying you don't have the right to collect your debt, but there has to be a proper mechanism to collect your debt and using that data. You can go to relevant court to collect your debt. You cannot use that data to send thugs and other so-called unwanted people to collect your debt. So that's
Great
for me
example.
a is a lack of transparency.
Great example. I'm sure many more queries like questions like this would turn out. So that brings me to the last one. Now, now this is a very interesting one. Now we being the data fiduciary, who gets penalized? Is it the data fiduciary, or is it the channel partner or a fintech or an agency? So who gets penalized? Where does the buck stop?
Okay, let me just classify that into four categories. One is obviously the data fiduciary, two lenders, three fintechs, and four agencies. Now, the primary entity liable is the data fiduciary. Lenders like banks and these are typical DFs, but many fintechs also become DFs when they decide why and how the data is to be processed. Lenders held responsible for data processing by the partners like some fintechs and face fines if the data handling of partners violates the act according to the applicable rules. So, for example, I mean, lots of banks and financial institutions also outsource the KYC and other things to third-party agencies. So, if they violate the thing, the lenders themselves are liable for the same. Fintechs can be DFs or data processors, your BPOs and KPOs, which we were talking about earlier. If the process data on behalf of the lender, then the DF or the data fiduciary is responsible. But if the fintech determined purpose means they bear the brunt, say the so either the KPO or BPO is processing the data and there's a leakage, even in that case, even the fintechs are liable. Any agency acting as a data fiduciary or processor within the ecosystem is subject to act and are liable under this liability penalty.
But the main owners of the liability is on the data fiduciary. Because
Yes.
it is data fiduciary, you should have to have a proper contractual control on their agents.
Correct.
Okay,
So,
great, Apurva. I'm very sorry, we are constrained, we are hard pressed on time, so I'll have to
I
stop
agree.
you here. And I would have to move to our third segment. This is a very interesting segment, and we are here. We have an expert here who would help us understand how does technology system and our current system how good are they in terms of adapting to DPDP, and also is there any redesign that's required? So Sharad, I would request you to we'll directly dive into Q&A. So the first question that we would want to understand is that can existing collection tech stack handle consent, arbitrage, and purpose limitation?
See, I think including banks, NBFCs, and the whole financial services, the current systems are not geared up for the DPDP compliances. When I say this is typically for the collecting the granular consent from the customer is what is the most necessary and compliance part, and where we will communicate through call, WhatsApp, SMS, what purpose we will be communicating for. So this is very granular expectations which regulator wants to be captured at the time of lending or onboarding the customer. And same we will have to use throughout the loan life cycle while servicing the customer. So typically this consent capturing is not at all readiness with the many core systems or the onboarding systems, including then collection systems. So I think that would be most important development or design and development would be required. Similarly, on audit trails part, most financial transactions in the NBFC parlance are recorded with audit trails, who, when, what. But typically, downstream, when collection operations happens, a lot of times it is being operational. A limited information about audit is captured, audit trail is captured. So there again, a little more work will have to be done, having immutable logs and at the same time archives of those logs. So this is something which will also require. And purpose limitation, I mean, for what I will use this data of customer collections, analytics, performance scoring, and maybe training models in AI systems, which I will build to predict the delinquency of the customer and profile. All these granular operational activities which I will perform, I need to seek the consent at the time of giving the loan or the signing the loan contract, and that is where I think.
So that brings me to the second question. Coming to this point, what do we do with our legacy contracts?
Existing contracts, there is no option. I think we will have to collect those consents in the time to come. At the same time, the challenge here is a cross section of all the regulators, RBI, SEBI, and IRDA. Everybody has to work together and also have to provide their guidelines in alignment with DPDP Act, because while the master circulars were issued by RBI recently and consolidated, they have not taken care of DPDP yet. So I think we should hope for a guidelines or circular from RBI's, because there are many guidelines or the DPDP requirements are in contravention to the RBI circular requirements. So I think we have to wait for that. But at the same time, as we have almost 18 months time to prepare ourselves, we should start with the honest approach of defending the first level operational risk, which is with our collection teams and field agents. So wherever whatever data is being used, we should prospectively start collecting the granular consents, record the usage of the data of the customer using the systems, and maintain these audit logs. I think that is something which will require.
Great. So you're suggesting that early adoption, the sooner the better, because 18
Yes.
months might seem a large time, but given some NBFCs and banks having the customer count run into even
Yes.
crores, that definitely is a mammoth task. Okay,
Because
that brings
those
us to
given the huge task, like SBI, like bank, will have 30 crore customers prior
Yes.
to DPDP Act was implemented. I mean, as enacted now, and bill is also in action. So 30 crore, how they will collect? Currently, the SBI like bank currently running the complete countrywide KYC drive, and I was just calculating by sheer size the old customers KYC. 10 year ago, customer has done the KYC, which will come now, so which will approximately 13 crore customers. Now 13 crores also, they to complete them, it will require 2 years at least. I calculated all their 25,000 branches and 2 days. It will still not happen. So I think then we are talking next to impossible task for even collecting the granular task. So I think some or the other action has to happen there. But nonetheless, we should start complying prospective manner and showcase the regulators our intent.
Well, this is definitely going to be a number crunching activity. It's going to be very challenging. But that brings me to the next question. So, what breaks first? Are call recording, CRM access, or data retention?
Okay. See, typically for this DPDP, every organization, small or large, they have to focus on their information security management systems. That means the whole how data is captured and how it moves across the various systems and how it is protected. So typical triad is confidentiality, integrity, and accessibility. Now, as all the three major systems you mentioned, call recording and then CRMs, typically these confidentiality and accessibility, these are the two areas where most systems are not designed by privacy by design. So we are going to flout those compliances there. So first is very much important is your call recordings. because we are taking the implicit consent that this call may be recorded for the organizational improvement purposes and also that way. But there we have to then necessarily mention what exactly it is being used for, and we also have to record the customer's yes maybe, and then maybe transcribed all this into text, speech to text, and record it as a audit logs. So that could
So
be
that's quite a challenge. So what if we are calling a customer and the customer says no? So we'll have to disconnect the call when it comes to collections call. Well, these are the
correct,
challenges I
correct.
think only the future
So
will
we have
solve.
to we
Only
have
the future
to
will solve. I'm
we
sure
have
there
to
should be a
design our
remedy.
scripts. We have to design our scripts in such a manner that customer has to answer no, but that answer will be yes for us.
That's a good one.
No,
And this brings me to the
that is a
final
negotiation
question.
technique actually.
Absolutely. So it's not tech always. There's a human element
Yes,
to it. And of
yes.
course, the core of collections, and that's what I think all of us do here in this particular webinar. It's 99% people management. So
And the
great.
major
So this
second
brings
point
me to
failure
the
is,
last question.
I was just completing, the access to many
Yeah.
systems are actually currently many organizations, mature organizations in technology have already have done the hierarchy level and need to know basis access to various people, including hierarchy of field collection agents, then senior agents, and
Yes.
then the national managers. All these hierarchies are well managed, but then still these hierarchies has to be revetted with the these new guidelines.
Great. And this brings me to the last one. And I know you've been in. So if in case, do we really need to panic a lot about this, or do we need to start spending on new technologies? And if we have to, I mean, this is just hypothetical question. If we have to, as any collection leader, what do you think would be the immediate attention? Where do you think we would have to spend our money?
See, I think it is less about technology, because technology as an organization, we are talking about financial services, typically lending business, that is where collection is most prevalent. Does the business in the, it's a two type business, select the customer and collect from the customer. These are the two only action and activities. So basically in collect part, we need to document each and every granular activities of our customer touch points and what we are going to do with that. If that table, once it is developed and designed in anticipation with all the activities we are going to do, I think most things will be easily automated with the help of technology. So this is where very important tool one has to invest time is DFD, data flow diagrams, and the recording of processing activities. These are the two things as a part of readiness one should focus in first 90 days or 100 days. And if that is well designed, because planning is very important. So if this is well designed and all these matters or of the granular consent are also captured in the your loan contract, I think most things will be taken care, and what will remain after that is a residual risk which we have to live with. But then, as point question is, whatever crore rupees will have to be spent across all the systems, not only collections. So typically, it will be shared efforts across all the systems, but specifically for collections, the majority point we have to spend on the call center technologies, because based on my observations over last many years in the industry, uh, our collection ecosystem, where the principal, that is lending company, and then collection agencies operating in the space, they are not, they are ill equipped, they are not spending or investing money in these governance regulatory controls and putting everything into systems. So that is where I think I will put my money into building a call center technology with the cloud based telephony, where I will be able to simplify all the data points into system itself and making it easily accessible with the need based requirements. So I think CTI will undergo a lot of change. There will be huge demand for a better call center technologies, and mostly cloud based will help in complying with these requirements.
Great. So in conclusion, I think not much of in terms of investment per se, but we would have to just go back to the drawing board and have a look at our data diagrams and tweak our existing systems and processes to ensure that things are properly captured. Okay,
Correct.
great. Thanks a lot, Sharad. And this brings us to our last slide, where I would urge all the three panel speakers to come in. So these are our last three questions, and after this, we would probably move to the Q&A session from the audience. So this goes to anyone. I mean, Ravi or Sharad or anyone, Apurva, you can answer this. So does DPDP reduce recoveries in the short term? Yes or no? And make it a very simple yes or no.
This is a difficult question, but there is no objective answer for this because companies which will take first mover advantage and design their systems well in line with the requirements, I think they will be able to do better recoveries, which will against the laggards, which will not prepare themselves for this kind of. See, important for the regulation or any law is intent, whether you are designing and you are working towards with the intent and building the systems. So I think nobody will get a fine of 250 crores in the day one, but the
Great.
first breach notices and then time to modify and all that will happen.
So if you have a first mover advantage, or if you really are start building on it from the very beginning, and have a proper preparedness, I think this should not be a problem.
Correct.
It should not
Absolutely.
pose this DPDP should not pose a problem in terms of lesser collection. Okay, great.
Correct.
The second would be uh, will it clean up collections, or is it just a risk of outsourcing? Just shift the risk of outsourcing. रवि, आई थिंक यू कैन कम इन ऑन दिस. आपको लग रहा है कि ये कलेक्शन का टोटल जो आज के दिन एफिशिएंसी है, इट विल जस्ट क्लीन इट अप, या आपको लग रहा है द वे वी अप्रोच आवर आउटसोर्सिंग सिस्टम, आवर वेंडर्स, do we need to come with a change of strategy in terms of a collection management, especially with regards to outsourcing?
No, I think maybe we would go more strategically now to understand now, as I think Sharad has very clearly mentioned, what exactly we need to start is first in the CRM system. The first thing what you want to do, the moment it is set up, your early delinquency issues are under control, right? So that gets controlled. Now the second is only how the data classification tools and how you classify and control the environment. So whichever organization does this first would really go into a very safe environment of collecting customer or reaching customer with a proper system in place. Now, very, very critical is how quickly we get into the tech stacks and bring those three areas, right? So when one is, as Sharad mentioned very clearly about the first investment should be on your CRM system, which we already have, something which we need to bring in more sophisticated systems to record concern and see how the concerns are being recorded. Then next one is the tools, how you classify the tools into a confidentiality, into a public document, into a non-classifiable information versus classified information. So that's tools if you bring in with the system, and eradicate completely your physical forms and put into digital with a encrypted system. So whoever does this would definitely get into a clean system, but whoever does it in the earliest can do the trial and errors it's okay, because we have 18 months time again now, removing this 1.5 2 months. So I would say it would be 16 months time to somebody to try and see how this encryption, how these tools work. But having said that, we have seen 24 months, if I'm not wrong, almost in GDPR, they are being very lenient on the system because they understand how the system moves is not so easy. And I completely echo with Sharad what he mentioned is one of the biggest issue concerns on the banking sector is that you look at SBI, entire economy shakes up if you something moves up in the SBI system, right? So it's a backbone of entire banking and financial industry. So if you look at that and look at our systems, what the remaining is completely one thing where government has to relook and see how they can make flexibility on this. And if it is morely coming to the forward looking and the legacy can be at least see from a legislative point of view, that would really get a good thing. But again, coming back, whoever does good tech no integrations faster, makes their encryption system, definitely they're going to get benefit out of this.
I think we are again and again coming back to the same point. You would have to really take a head start and ensure that it's implemented within a short span of time. The early mover advantage. Surprisingly, this usually is a concept which is more relevant in sales, but I think in collections, the early move advantage would make us more equipped to tackle the DPDP challenge. This brings me to the last question before I move to a Q&A session for the audience and the participants. And this can be, I address it to any one of the panel members. So, is the industry ready to move from volume driven to precision driven collections? Are we ready? And do you really think that 16 months or 14 months is good enough a time for us to fine tune our processes and have that mindset change and ensure that the transition is flawless?
I think Ravinder should answer this. Most veteran.
Sharad, I think what we are looking currently is if I can tell you about the Puttasamy judgment, what is came and which has actually become a landmark for the privacy.
Correct.
So,
Correct.
identifying your privacy rights, and that made clearly a push back to all the fintechs in India. The Indian, the what Silicon Valley, Bangalore was completely pushed back because the Supreme Court judgment has taken away a lot of freedom. The reason was that everything was connected with the PI information, and that's where I think we all really got. Now, if we all really understand this, and if we can really make this plug-in integration from TechStarts can jump in here, definitely this is going to be a big boost for the companies who can want to do clearly and a lot of precisions, as it clearly says, it can give a lot of analytics and also maybe say data driven informations clearly. But again, technology is the only method for the digital. The entire act is talking about digital, and the tech stacks and the fintechs are the only crucial points for us to take us to this next level. There's no other option for us. And again,
so basically, Ravinder, to add to you, there is a lot of and big opportunity for fintechs to actually devise the solutions to help in digital tracing of the members with the help of capturing proper consent and against consent doing those algorithmic search and support the collection staff. I think there is an opportunity.
Just on the context, I think when we were initially looking at the before the Supreme Court judgment was given, we were the first thing we were working on getting the digital signatures, and where we got stuck clearly here is about these data. When we look at they were giving a lot of insights and a lot of solutions to us, but suddenly it has pushed back now. But looking at this, still some of the questions again for Sriram's question on the second point is still there would be some risk on the agencies, right? Outsourcing is
correct.
It cannot go away completely, but I think it would be evolved. So maybe there will be some lenient steps need to be adopted by the government rather than putting a hard stop in May 2027 would not be a right solution. As Sharad mentioned very clearly, those are humongous act of getting concerns for the legacy data. It's not so easy. So that ambiguity has to be cleared at some point of time.
And at the cost of outsourcing also will increase because outsourcing agencies has to comply with a lot of controls and they have to put controls and systems which will increase the cost of outsourcing. That is my basic forecast. Because
it's a very good point. That's a very good point. The more we have to be compliant, I think definitely yes, it might have to cost us more. Okay, so well, we do have other 15 months to wait. I think we would not know until we have tried and tested. But I first of all would like to really thank all the three panel members. I think the entire presentation was very extremely informative. I did take a lot of learning back home, and I'm sure all of us as an audience and as a member of AICPN have. This brings us to our final session, which where we would urge our members to come up with their Q&A. You can unmute and ask any one of our panel members, or you can also put your questions on this chat box, and then we can probably take it up. Anything is fine. Okay, so I have Pranav. Pranav, is it different of business lending versus consumer lending? Is a difference for a business lending and consumer lending? I think any one of our panel members can take it. This was
You
I
can
think,
take that.
was pretty early. Yeah.
I don't think that there is any difference for business or consumer lending because one is B2B, one is B2C. The data processing and data collection will be the same and the standards will be the same. In fact, for retail, consumer lending will be slightly more because in terms of cost effectiveness, because you're dealing with many more such consumers rather than a B2B lending.
Great. Anyone else in the audience or any participant who would want to come up with any other question?
I have a question here. Maybe Apoorv can answer or Ravi can answer it. Does DPDP Act allow the principals to share information with other partners specifically, or does it prohibit?
Okay, Venkatesh, just to answer that question, it expressly does not prohibit you from sharing data with other partners as long as you're complying with the law and it's required for the process to complete the transaction or the contract and complies with the government order, the RBI guidelines, and any court order. However, if it's not in compliance with these two, you cannot share the data with a third party at all. So that's under the legend we use and the data fiduciary relationship which you have with your other co-partners or partners.
Okay, I have a follow-up question. Okay, let's say a lender is sharing a data with a third party. Take for example, an agency. Can that third party store data in its cloud or its premises? Or if so, who takes up the responsibility for complying with DPDP on storage of data and there is a leak? Who will be on whom the owners would be?
Yeah, I think I would answer, then Apurva can again supplement it. First of all, any data which is processed from data principal to data fiduciary, it is on the obligation of the data fiduciary, the entity, the organization, need to look at, even if it is for processing for your concern given for a purpose like for collections is part of the contract during the term of the loan contract. If you are processing it, it's on obligation on the data fiduciary, not the agency. However, what it says is you need to have a clear contractual agreement binding the service provider or your associates, whoever is doing it. But the data, any breach on this data is squarely liable on the data fiduciary. Maybe Apurva, if you can supplement if anything.
No, I agree with you, Ravinder. Primary liability for storage is with the person sharing the data. So if any leakage happens at any touch points, the liability will be the person who's collected the data and collected the data and supposed to use the data. So there can be a subcontract between the fiduciary and the person with whom sharing it for data protection. And if there's a breach of that contract, then you have a contractual remedy against that person. But the primary liability under the Data Privacy Act and the rules read with the IT Act, and the IT Act, I would say, Information Technology Act 2000 is also played a key role here. It would be the data fiduciary, the principal person who's collected the data.
Okay, I have one last question to ask. The PII data, whatever we collect at the time of at the time of lending, the borrower can change it at will. He can change his phone number, he can change his address, he can whatever is there any obligation on the side of the borrower to communicate if there is a change in the PA information? I mean, our problem of NPA customers is mostly the contactability, because this guy has changed the phone number, changed the address, changed everything. We're not able to trace him. That's why we had to go and look for a third party information, like a fintech which provides scrub data to figure out where this guy is. So, is there an obligation on the borrower side to update the lender if there is a change in PII? Can we use that as a tool, as a threat?
We can use the tool Aadhaar card. Any person, any defaulter, any human being, any person by Aadhaar card itself, we can get any skip customer number also. If he has a Aadhaar card, I have tried so many contacts, okay, in NPS and recoveries.
No,
for example, Venkateshan is there in Bangalore. He is a defaulter. He may change his phone number, but he will update his phone number in the Aadhaar card. With the Aadhaar card, we can find out.
No, Ashok, my question is there any obligation under the DPDP Act for the borrower
Let me
to
answer that
update?
question, Venki. Under the DPDP Act, there is no obligation of the borrower to provide the change information to you or to any fiduciary from which he's taken the money or lender, whatever he's done any transaction. However, you have entered into an agreement, a loan agreement or any other documentation. So there'll be a contractual obligation for him to share the data, and you can sue for breach of that contract and try to find him under the contractual regulation other than the DP Act. Under DP Act, there's no obligation. Let that be very clear. As long as he provides the correct data at time of taking the loan, there's no further obligation for him to change the data or any further information in case of any change he does in the future or doesn't do.
So I would supplement, I think it's vice versa. Again, the borrower has a right to correct your data. But there's
he has a right to correct, but not an obligation to correct.
No obligation. But he has a right to ask you the same that, hey, you have to correct this data. This is my details. So that's the right to question is part of this act. But again,
I agree, he has a right to correct the data, but no obligation. Okay, so therefore, your right may be under the contract which you've entered with him, not under DPDP Act.
Thank you very much.
Any other questions from audience, participants?
Hi. Good evening, all. Sachin here.
Hi, Sachin. Please
Hi.
go ahead.
Just a thought. In case on this DPDP part, can we have some covenant inscripted in at the time of loan agreement or the time of onboarding the borrower? Just a thought whether it will, because every time going back to the borrower and taking the consent, it will save a lot of cost and time as well. So I just need a legal view on that. Can we inscribe that in at the time of inception in the loan document itself?
Blanket consents are not allowed under DPDP Act. You have to go and ask for specific consents every time. So, earlier I used to draft a lot of these agreements which gave the banks or fintech company blanket consent to ABC. That is no longer allowed under DP Act. And so that's ruled out. There is an additional cost for you guys to do anything which you need to do. So obviously that may translate into a higher burden to end user consumer in terms of interest rate or whatever else. So that's a component which you need to look into. That's a separate story. But under DPDP Act, blanket consent is not permitted any longer.
Correct. Apurva, I just want to add to Sachin's point. See, this is where I want to solve the problem from the technology perspective, because consent should be taken explicitly. It should be allowed to tick or choose by the customer. And if, let us say, in a planning stage organization, as a lending organization, if we are able to design all the 100 data touch points and the usages which we will require to service the loan, if we are able to list down and make it standard 100 items and make it tick and explicit consent based in the beginning, I think that will help. And what rightly pointed out Sachin, in loan contract, if we can bring those consents into loan contract with effect of whatever loan contract term. I think that will help us as a minimizing the risk, mitigating the risk. Of course, customer will come back and he will say, "मुझे I want to revoke particular consent." That also option we have to anyway give them. So now, if customer is going to come and invoke the revoke the consent, again we will have to verify him. Again we have to take the OTP and the consents, like new mobile number if he is changing. So likewise, we need to build our system such a manner that it is useful for us to service the customer, rather than getting the pains later.
Okay.
Okay, thanks.
I have one more question. Uh, I'm assuming that the PII data would include mobile numbers. Is that right?
Correct.
Okay.
Yes.
So when you are applying for a loan, many a times you are asked to share your friends, mothers, fathers, somebody's mobile number as a in your application, in your as a, then am I allowed to share somebody else's PII data without their consent?
No,
No,
you're not
I think
allowed to do it.
I have a different view on this. So look at the number. Number is the general identifier. It's not the PI identifier. We have connected it as a general identifier that I hold this number and I use it for my banking, but it is not identified as a KYC ID for me. It's an identifier, general identifier, right? Why I'm telling this is, if you look at the mobile number in the TI industry, no number would be 100%, all numbers would not be to that particular individual. It will be the father's name, somebody would be taking a SIM, a son will be used, then in that case, that entire gets chaos. Now, my understanding is that it is general identifier, but it cannot be critically as a KYC related identified document.
So
It can be.
So Ravi, what you're saying is I can share somebody else's phone number on my loan application without their consent.
But that's the only, we are not connecting anything on sharing anything other than the number, right? So we are connecting only number, and again that number again right now, if you look at current TRI regulation clearly says
Okay.
it
Okay.
classified you from
Let's say
1400 years in 60
I
years.
make a loan application and share your number as my friend. Is that okay with you? And
So that's
DPDP
where-
Act allows
yeah,
that.
so exactly. That's so what happens is, earlier we used to write XYZ number, the executive or the representative, whatever, writes his number, he writes his own number also, nobody bothers to validate it. Now the system, what it has made it to get validated immediately, but that is a concern where we can take it, right? If I reference it, say I know Venkateshan, then Venkateshan has to give my number, I need to get validated immediately that yes, I know him, this is my reference, yes. But not like unlikely XYZ collection sales or no, the whatever he says, whoever writes XYZ numbers would not be valid nowadays.
So we would basically
That's
have
my
to
view.
include it in the onboarding process, where we do a
Validate,
daily
yes.
calling and get validate or cross check, cross verify the details.
Right. So one in the deal, you also get the validation, right? So you get a reference, you get a call also that he is applying for so and so.
Correct.
Do you know him? So that's a validation you need to make rather than just putting a number.
Okay.
I hope it answers Venkatesh.
I'm not
One
still
thing
convinced.
One thing
I'm not still convinced.
Is that the key fact statements are going to get much bigger. It's not going to be a single pager anymore, and it's not time to say how many pages would it run to. But yeah, I'm sorry, Venkat. Sorry to cut you.
No, I'm not totally convinced. I will not be very happy if Bajaj FinServ is calling me saying that Apurva has applied for a loan, he has given us your number. I wouldn't be super happy about that. Why did he do that? Because it is a private information that I shared with him. Be it my son or be it my friend, that is not acceptable, isn't it? So, all right. Thank you so much. Really appreciate everyone's time today, and Apurva, Sharad, and Ravinder for taking time out and speaking to us. A special thanks to Shriram for moderating superbly well. Thanks everyone for the participation. Really appreciate that. This is our third webinar in our AICPN. This is the first time we are having experts from the industry to come and talk to us. I'm super excited that the AICPN is shaping up as a future professional body to represent the interests of collection professionals in India. And thanks everyone, and really appreciate for everything and every conversation and every very insightful panel discussion. Thanks again, and have a great weekend. Unless there are any other questions, we'll be signing off now.
Thank you. Thank you.
Thank you very much, and happy day to all.
Thank you.
Thank you.
Bye.
Thank you all.